Hello, everybody. So another Wednesday, another dump. Hopefully, it doesn't continue into Thursday. Historically, we've had very bad Wednesdays and Thursdays the past few weeks since we've entered this period where the market has gone completely nuts and where, in my view, there are some liquidity issues under the hood. That's the only way I can explain some of the movements that are going on in the market. Worthy to note, such a persistent dump on growth stocks for so long is a really, 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 really rare thing. Because remember, we didn't get a fall. Like we haven't had a fall. The fall was awful, and we're entering a period pretty soon that's supposed to be once again good for the market. But it just keeps being awful, which is the title of this video. Market loves to dump. The market right now just loves to dump stocks. And we keep going through this, and this has been a theme of the entire 2020s, as long as we have a stubborn Fed who continues to bluff and make people believe that you can have such a thing as rates over than zero, which you can't, because there's too much debt in the system, and we don't want to go through a depression. But we've been in this game of bluff for 5 years now, maybe 6 years. Maybe it's going to be 6 years. We'll see. 2026 is supposed to be the year where we get epic rate cuts and where we get a financial system which is more normalized, i.e. where rates are zero, i.e. where when the rates are zero, we actually get a normal economy and normal money moves, normal money flows. The currency is going to zero. We've been going through a period of 5 years where we've had a stubborn Jay Powell and Fed chairs who live in La La Land, and this is why the debt has gone through the roof of the United States. This is where our economy is indebted like crazy. It's the banking system. It's a complete wall of debt. It's a complete bluff that we've had post-events of 2020. The 2010s were a much better decade. The 2010s, the rates were essentially zero the whole time because they knew back then that it would be all a bluff to try to make the rates go up. Anyways, bad news is good news, good news is bad news. Today we had a jobs report. It turns out that the number is good. The unemployment is going lower. The jobs are getting better. My assumption is that until the midterm election, the job report is going to be better and better and better and better. Wait until November 2026. Every month, every other month, maybe we'll have a bump here and there in the road. But my assumption is that the jobs report is going to be really, really good up until the midterms. I don't know why I say that. My assumption is also that the inflation number, the CPI number, is going to be on the low end. I'm hoping for a good news on Friday when CPI is released, but we know Truflation is showing extremely low inflation right now. Perhaps even at some point in 2026 going into deflation territory. But here's what we know is that the government relies on convoluted methodologies and get this is 1970, surveys, right? Elite technique of 1970, surveys in the era of AI and content analysis. And of course, you can manipulate a survey however you want, right? You just tweak the question a little bit, do a little change to the question, put a leading question, change the scale. You can make the survey change in the way you want to go. And of course, in the early days of the channel, I used to cover the shenanigans of the CPI and the changes that they put in the CPI in order to direct it in one way or another. This is just the way it works. And the fact that the market reacts to this data, to me, is absolutely crazy. Because over the long term, in my view, there is no other way the rates are going to zero over the long term. And so is the currency over the long term. Because we have too much debt and we are not willing to go through 2 generations of despair. 2 generations where 70% of the population get soup. We are not willing to do that. We are not in the 1930s anymore. We are not willing to save the system via 2 depressions. It's too late. Rates are going to zero. Anyways, that's my take. I'm sorry for the rant. Okay, a lot of people on social saying, oh, now we're in for a rate cut only in July. This is not what the CME FedWatch tool shows. The CME FedWatch tool shows that the rate cut is still coming in June, which is also what I think. Opening of a new Fed chair, the coming of a new Fed chair would be nice to begin with a rate cut. Unfortunately, a small one, 25 basis points, but it would be nice. It would set the tone. But anyways, I'm hoping this bluff doesn't continue. Anyways, I've already called it 2020's awful investing decade. This has already been called. No matter what happens, even if we get a rally now for the next 4 years, it will still have been an awful investing decade. I am looking forward to the 2030s or to 2029. I don't know, like something like that. That's what I'm looking forward to. Anyways, let's look at a few stocks that are dumping. So we all know what HIMS did, right? HIMS, of course, the GLP-1 shenanigans, the madness with the GLP-1s. I guess we're going to a lawsuit. By the way, look at the latest HIMS House episode with a patent lawyer. Very interesting. That lawsuits will probably take place in 2029. 2029, most likely. It will take place in 2029. So we are in for years of overhang on the stock. And I mean, this is kind of what I thought. The HIMS House interview, I also recommend if you follow HIMS. They were talking about how actually there could be a clause with the manufacturer of the GLP-1 compound, where it's the GLP-1 compound manufacturer who would have to give some money to HIMS. I also thought it would be very interesting as to who would share the damages. Anyways, doesn't really matter. HIMS should not trade this low. HIMS at $16.90. HIMS is now trading as if all of the GLP-1 business was going to be gone forever, which is not the case, because I guess a decision would be made in 2029. No, probably not, because they would appeal, and then maybe it will go to the Supreme Court. So this is going to be at least 5 years. So they're going to keep selling compounded GLP-1. That industry is not going away. I mean, I receive ads for like Groupons selling compounded semaglutide. It's not going away. This is not going away. That industry is not going away. Yet the stock is dumping 66% in the past 6 months. But here's, to me, I've compared Oddity and HIMS quite a bit on this channel. Oddity is a stock I like. I think it's a very interesting stock. I think it's a very similar story to HIMS, but in the beauty sector. Oddity gets people hooked on the beauty products because they use AI to customize the beauty products. Anyways, I find Oddity very similar to HIMS in many, many respects, from subscriptions to the nature of product they sell, to cutting the prices, to customizing the products. Anyways, Oddity, no shade, no nothing. There's been no issue with Oddity. Oddity is one of the least followed stocks out there. Look, it's down 50% in 6 months. Down 50% in 6 months. Go tell me this is not liquidity issues with the small caps. There are liquidity issues in the small caps. Like, what's going on? There's barely no difference in the move. One of them is firing on all cylinders. No shorts, no backlash, no nothing. Just a quiet company in the background. Sold off 50%. HIMS is barely sold off more, with literally the worst streak of news ever. There's liquidity issues in the system. Like that's the only thing I can explain. And by the way, both of these stocks are cheap. They're both dirt cheap. I would be hard pressed to choose one between one or the other here. I guess I would choose Odd by now, because it's a sector I'm less exposed to, Odd, than HIMS. But still, like, this is crazy. This is absolutely crazy. Anyways, moving on to other stocks that are dumping. So Sofi, just like HIMS, it's got the punching bag of the market trophy. So I don't understand. I really don't get it, except I do get it, which is the market wants nothing to do with the fundamentals. Wall Street just dumps innovation, has nothing to do with the fundamentals, doesn't care about the fundamentals. It's all about the news in the next 3 days, in the next 5 days, all about the jobs report and the CPI, and boom, you just dump the high growth, firing on all cylinder, small cap stock. Sofi is firing on all cylinder. I find Sofi at 0.26, a deal on EV over GP over RG. Rule of 40 is a 59. SoFi to me is going to be one of the winning companies, one of the winning fintechs of the future, one of the top banks, one of the top 10 banks eventually. Sooner than later, by the way. And then we have Robinhood. So I listened to the call of Robinhood. Robinhood gives a masterclass in investor relations, by the way. If you haven't listened to that call, that call was outstanding. Like it looked like an Apple Steve Jobs presentation. That's how good it was. Robinhood is also firing on all cylinders. Yes, I suppose the market is upset because the asset under management of the platform dropped ever so slightly. But do you know why it dropped so much? Because we've had the most epic crash the past 4 months. The past 4 months, everything has been down, especially the stocks that are likely to be held on Robinhood. Right? I don't know a lot of people who own Schwab dividend on Robinhood. Right? People on Robinhood own growth stocks. So of course, and Bitcoin. So of course it's slightly down, but it's barely down. I think it was down something like a little over 10 billion or something like that. It's barely down. They're still guiding for $1 trillion in asset under the management. I can't remember the timeline, but not that long of a timeline, but they're showing you this. And here's the better question. Do we see a scenario where in the future the neobanks, neo-trade platforms, I would put Coinbase in there, even though Coinbase is a stock that I don't really analyze because it don't fit in my spreadsheet, but I would put Coinbase in there. Do we see, there's other smaller ones, like I could put the Cash App in there, I could put Webull in there. It's the whole fintech sector. Do we see a future where fintech does not win? Do we see a future where fintech does not win in the future in the short term? And then eventually, of course, take note, fintech will be disrupted by crypto eventually, but crypto is so much more in the gutters. It's not even funny. Like there's a big event happening with Solana right now. Nobody cares about Solana right now. It's a disruptor 10 years out. So nobody even cares about the disruptor 10 years out. Anyways, the disruptor right now, who is disrupting traditional Wall Street, traditional banks? Who is disrupting them right now? Like prime time. It's Robinhood. It's SoFi. It's their prime time right now. The market dumps them nearly equally, if you ask me. And the market seems to believe that Charles Schwab is going to be the future. Look, Schwab is only down 5% in the past month. Robinhood, 35%. Yet which company is growing like crazy, right? I know which one is growing like crazy. Which company is executing like crazy? It's Robinhood, moving so fast and getting into banking. The best credit card. I can't imagine the dent. I mean, I know a lot of people still don't have a 3% credit card of Robinhood, but I have it. That's my only credit card I use. I love my Robinhood credit card. Best UI, best UX. Yeah, sure, people complain they've got it into betting right now, but whatever. I mean, I'm not gonna bet. I think a lot of people won't bet on Robinhood. Anyways, it's not. It's crazy to me. Robinhood is aligned with younger millennials, with all millennials really, and with Gen Z especially, and Gen Alpha. Robinhood will be so well suited to Gen Alpha coming up, and eventually the money that's stuck at Schwab, that's stuck at Fidelity, eventually will flow to Robinhood as inheritance goes through the regular process. So anyways, I own Robinhood. I love Robinhood very much. I don't understand this drop. It's nonsensical. And the last one is Reax. So a stock where there is literally no news, like literally no news. A stock that was already cheap, months back when I started covering it, is now trading under $3, down 44%. Past 52 weeks for literally no reason whatsoever. Reax, again, little followed stock, but just go look at the growth numbers of the stock. It's through the roof. Not a single bump in the road. No nothing. It's through the roof. And the market is just entirely ignoring the stock, trading it in a basket. So all of these are examples as to why, frankly, if I was a CEO, I would want to stay private. I admire the CEOs who want to go public. I would stay private if I was a CEO. The disrespect that the stocks of innovative small, quote unquote, small cap companies get, the disrespect on the market is just nuts. I would just stay private. And I'll conclude with this. I'm not talking about CleanSpark in this video, but if you follow my coverage of CleanSpark, I never understood why they got rid of the CEO in the first place. The CEO is not responsible for the stock price. So CleanSpark fired their CEO. What was it, like 5 months back now? So the stock is even lower. Like lower than it was when they fired the former CEO. So are they gonna double fire the CEO that replaced the one that was previously fired? Like at the end of the day, the TradFi Wall Street is just amping up the punching bag and just going after these companies. It loves to dump them. So anyways, if you're curious about this, I find this pretty darn abnormal, and I don't think I'm the only one. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.